I love it when the bank won't lend me money. That's when I start getting creative about buying property that no one else can fund. There's going to be a massive explosion, in my opinion, of residential investors showing more interest in buying commercial assets, which have 3 times the net income.
Why do banks say no?
Because of their restrictions, you just can't get a loan. But
Why do investors give up so early?
if you find a really, really good deal, you've got to, instead of saying, I can't get a loan, you've got to start thinking, how can I finance this deal if it's a great deal? So one of the creative financing strategies I used was I went to my ex-wife. If there are 2 really, really important skill sets you need to have, one is you need to be able to find a great deal. And secondly, Hi, I'm Andrew Wright, Principal of Professional Southport, and this is the Andrew Wright Property Podcast. I've built a multi-million-dollar property portfolio, delivering a 7-figure annual rental income, and led my real estate team through thousands of sale and lease transactions. In each episode, I share real deals and strategies that will help you find, fund, and operate profitable property deals. The aim of this show is to provide education and build a community of like-minded investors who can collaborate, share insights, and help each other in each other's journeys. You can make excuses or you can make money, but you can't do both. So come and join us.
Hello and welcome back to another episode of the Andrew Wright Property Podcast. Now, today's episode is going to be incredibly valuable for anyone who's ever found a great deal but then hit the wall with the banks or any institution that just won't lend you the cash. Because when banks say no, that doesn't always mean the deal is dead. It might just mean their structure needs to change or you have to think outside the box. Andrew, welcome back to the podcast.
Thanks, Adam.
Good to have you here. You've done a number of deals recently using joint ventures, private funding, vendor finance, and strategic negotiation. So I do want to start there. But before that, hot topic of this particular week is the budget. Can you give me your take on that? Because there's been a lot of commentary around it.
Yeah, I haven't spent a lot of time analysing it, but probably 2 things that I would point out is, first of all, I think from an asset class point of view, the big winner is definitely commercial property. I mean, at the end of the day, residential investors are not going to get a cash flow boost from the government subsidising negative gearing going forward. So there's going to be a massive explosion, in my opinion, of residential investors showing more interest in buying commercial assets, which have 3 times the net income, and they'll just struggle to get residential loans because a residential mortgage broker use a serviceability calculator, and they have the negative gearing tax benefits from the government helping to fund it. But what we're going to find is, with interest rates going up and no cash flow incentive from negative gearing, that people's borrowing capacity for residential property is just going to go down. It's going to be harder for them to fund, and a lot of those investors are going to move towards commercial property where the net returns are 3 times higher, and they're not negatively geared anyway, so it's just not going to impact commercial property investors at all. It'll actually be a blessing.
Yeah. So a really good point to make. If this is the first episode you're listening to of the Andrew Wright Property Podcast, so many of the episodes have been around commercial deals and how to how to think differently and how to put things together that you've probably never thought of before. And with the changes around negative gearing. Looking at commercial property and deals is definitely something worthwhile doing. Go back, listen. This is episode number 20. What are we on?
26, I think.
26,
Yeah.
27. So much good stuff there. But look, let's get
Just
into
go to the second thing I wanted to say there, Adam. From a structuring point of view, from the budget, I think what people will find going forward is that their accountants are probably much more likely to continue to recommend a self-managed super fund and structure because the 0% tax in a pension in a super fund, 15% maximum in a super fund in accumulation phase, and only still 10% capital gains tax for assets held longer than 12 months, because I don't think that there was any proposal to change that. And secondly, we could just see trusts not being used very often at all going forward, because accountants are probably going to recommend people set up a corporate entity. So companies and trusts are both proposed to be taxed at the same 30%. There's no real point going to the extra expense of setting up a trust. I think going forward, accountants will probably recommend a corporate structure. And companies, when you pay 30% tax in a company, they keep a franking credit, and directors of a company can distribute a fully franked dividend down the track, and you can actually claw back some of that company tax paid. So I think the use of companies going forward are probably going to be the preferred entity to use when purchasing property.
Fantastic. All right. Well, let's get on to it's actually very topical, now that we are talking financing today. Why do banks say no?
Well, all of them have their risk management parameters, and I think for a lot of people, particularly when you've already bought a couple of properties that have been negatively geared, they just do their serviceability calculations, and from a risk management point of view, because of their restrictions, you just can't get a loan. But there are plenty of great deals out there that are very, very good investments in their own right, even when the banks say no, and that's what I wanted to cover today. In fact, I bought, I think, 7 properties last year. I don't think I used one bank loan.
Yep. There are other ways to do it, aren't there?
That's right.
Yep. Because I think, one of the notes I've got here is, why do investors give up so early? It's basically because they don't know that there are other ways around it.
Well, I'll give you a classic example, Adam. 3 days ago, the day before the budget, I just bought 2 more industrial properties. And on that particular deal, I sent all of the details to my finance broker, and he came back and said, Andrew, I'm sorry, there is no way any bank is going to lend you the money on these 2 sheds. Now, 99% of the viewers here and 99% of investors in Australia, if you found a property you wanted to buy and your broker said, we can't get you a loan, you would walk away, wouldn't you? And you'd give up.
You'd give up.
But you've got to have the mindset, if you find a really, really good deal, you've got to, instead of saying, I can't get a loan, you've got to start thinking, how can I finance this deal? If it's a great deal, and that's what I've done, 6 or 7 deals in the last 12 months. I've done them where I couldn't even get a bank loan, and I've done the deals anyway. So if we go into this first example, which these 2 sheds I've just purchased 3 days ago, they're number 4 and number 6 Driftwood Court in Urangan. They're 2 sheds right next to number 8 and number 10 Driftwood Court that I already own, that I purchased some time ago. The replacement cost of those sheds is well over $2 million. I've just signed a contract to purchase them for $1,025,000, so about $1 million below replacement. I couldn't get a loan on them, Adam. So what I've done, and we'll go through it now in detail.
Can't wait to hear this. Yep.
I couldn't get a loan for it.
Yep.
But I didn't give up. I thought, how can I finance this? Now, option 1 would have been just to go and get a private loan, and I could have paid a 30% cash deposit and got a private loan, which usually means a higher interest rate.
Yep.
So instead of doing that, what I've done is I've entered into a contract with the seller to have a 7-month settlement. So our settlement date is 30th of November. So I've also put in there a special condition that this contract is subject to and conditional upon the seller entering into a brand new lease for the front shed at that property at a minimum of $48,000 per year plus $8,500 of outgoings.
Are you saying that they need to find?
They need to find me a good tenant.
Right, not them being the tenant themselves.
That's right. So
Right.
the reason I couldn't get a loan on this property is there's a 5-year lease on the back shed, but the front shed, there's just a month-by-month lease there at under market rent somewhere. So I couldn't get a lease doc loan because they need a minimum of 2 or 3 year terms.
Yep.
So instead of giving up on the lease doc term, I thought, well, if I can get a 7-month settlement, that'll give us 7 months to find a decent tenant for the front shed that will sign a long-term 2 or 3 year lease at least. And then I can get a lease doc loan when it settles in 7 months' time.
How do you know that you're going to is that just your level of experience knowing that getting that tenant in under a lease of that length will allow them to tick off? Is there risk there that they still, won't give you a loan at that point?
No, the banks, we know, you talk to your broker if you're listening about what a lease doc loan is, but the banks have a black and white policy on lease doc loans. And if you meet the multiple of the income by a certain amount and the rent is high enough and the lease period is at least 2 or 3 years' time, they will lend you. It might be either 60% or 65 or 70% depending on the actual income of the property. They'll lend you the money. So I know for sure if this owner goes out and finds me a great tenant on a 2 or 3 year lease, I will be able to get a bank loan in 7 months' time.
Yep.
And if he doesn't, well, I can pull out of the contract because it says in there that this contract is subject to unconditional.
So he's highly motivated to get this new tenant.
Yeah, and if he gets a good tenant, guess what? He's making a massive capital gain on that property to my benefit.
Yeah. Yep.
Because if I get a good quality tenant on a long-term lease, the value of that property goes up, and I benefit from that completely.
Now, just let me ask the question here, and I'm assuming you're all covered here. If he goes if I want to look at this at helicopter view, great opportunity to buy 2 sheds at a good price. What effectively was stopping you getting finance is the lease on one of them.
Correct.
Okay, so as soon as that lease is put into place and you get that, you're able to borrow, you're able to buy it at that price. Why? And you've put the onus on the seller to find that
That's right.
tenant. Now, why wouldn't the seller look at this and go, hang on, if I'm going to go find this tenant, won't this be worth a lot more and I could sell at more than what he may have just agreed on purchase price with you?
Well, we've just settled on a purchase price subject to $48,000 plus outgoings on that front shed, in addition to the current rent of $35,000
on the other
plus outgoings on the back shed. So we've already factored that into the price. He had an agent come up and tell him just recently, I can get you $1.3 million for this shed. I mean, at the end of the day, in last week's podcast, we talked about the opportunity right now for buyers of property to go to owners and use a carrot of locking in a 50% capital gains tax discount prior to the budget. I do what I say. I said to the owner, how about we sign a contract on the 11th of May because tomorrow there's a budget and it's possible that they will eliminate the 50% capital gains tax discount. Now, it so happens that they've actually given them another 12 months now to do it, but that was my tool to help the seller lock in those 50% capital gains. So he entered into a contract on the 11th of May to protect his family, to make sure they get the 50% capital gains tax discount.
Sure.
So all of this is part of the negotiation, and that property is right next door to the other 4 sheds I own next door, and to me, it's a very important acquisition. It's worth more to me than anyone else because it adjoins my site next door. 3,169 square metres of land, probably land value $750,000. 750 square metres of shed, and the front one is cold storage. So the replacement costs well over $1 million just for the sheds, plus $750 for the land. Good deal, $1,025,000. It'll be an 8% net cash flow once that tenant is in the front shed. Just up here at Harvey Bay with my son, we purchased the 4 sheds here in the background. Big one here, the cold storage, and 3 sheds behind. Looking to buy 2 more sheds from the neighbour over here. The neighbouring property, 3,169 square metres of industrial land. We've got one tenant at the front here with 2 lovely security dogs, which you'll see in a moment. And up behind we've got a gas company that's been there for 18 years. Hopefully looking to buy the property this week off market from the neighbour. Plenty of concrete and bitumen on the driveway here. Hard stand cost to be huge just by itself. Another big giant shed down the back. I'll let you know how we go. Great deal. Now, 99% of people would not have done that deal because their broker said, we cannot get you a loan.
See, banks don't lend on potential, do they? They lend on numbers.
That's it.
Now, the potential was always there with this one, but you had to work out a way for that potential to turn into numbers for a loan. And I think a really key point to take away from this is think about the deal you structure with the seller, the win-win we've talked about in other. This was a win-win for I mean, I would imagine a lot of our listeners don't ever think about long-term settlements. They think of it in terms of 30, 60, 90 days, and that's where their limiting belief would end. But you've done a number of deals. Where it's even up to 12 months.
Yeah, so it is a great deal. I mean, I just say that it was my second preference. I actually asked the owner if he would provide seller finance or vendor finance, but he is in his 80s and he said his family doesn't want the hassle of going to refinance it in 2 or 3 years' time from a bank. So I did explore the vendor finance. It didn't suit them. I could have gone down and got a personal loan, but then I would have had to pay higher interest. So this one was the next best option for me, was a 7-month settlement. You increase the value of the property for me in the meantime by getting a better lease on that front shed. And
he's motivated to do it.
You lock in your estate planning and you got all the money there for your kids, and you lock in your 50% capital gains tax discount.
Fantastic. All right, let's look at another one. We've got the Roseneath JV deal. Tell me about that.
So when we did a podcast on truck depots and industrial outdoor storage, I briefly mentioned this one, $340,000 purchase, $42,000 a year rent, 12% rental return. Now, when it comes to financing, like, I didn't have 1 cent to put into that deal. The banks wouldn't lend on it. There were 3 month-by-month leases with 3 different yards with industrial outdoor storage. I didn't have 1 cent to put into a deposit. So one of the creative financing strategies I used was I went to my ex-wife and I bought her a beautiful penthouse cash when we separated. How about I introduce you to my finance broker and you get a little line of credit or loan there? Can you get the loan and we'll put that as a deposit for this property up here paying 12% rent? I promised her that I would give her a guaranteed cash flow benefit by borrowing money at 6.5%, and I promised that our new entity would pay her 8% interest. So she's borrowing at 6.5%. I'm paying her 8%. She's got a guaranteed 1.5% profit there, and we'll go 50-50 in whatever capital growth we get in. We'll buy it in a unit trust, 50-50. And now what happened at that time is because the bank wouldn't lend it, I got a mate of mine to lend us 75% on that property. She put in 25%. I think it was about $85,000 or something she had to cough up. I'm giving her a guaranteed preferential return where she's making a guaranteed 1.5% cash flow. And my mates lent us 75% on that property. Now, it's 9 or 10 months down the track now. He wants his money back next month.
Yep.
So what I've just done is I've just gone to the 3 tenants, and I now have signed up 3-year leases for all 3 of those tenants, and now the banks will do a lease stock loan. I've paid $1,700 for a valuation, and the valuation just 9 months after purchase, or 10 months, it's come in at $440. So we bought it for $340. The valuation, which, as you know, quite often conservative, has come in at $440.
Mm-hmm.
So as well as giving my ex-wife a 1.5% profit on the money she's borrowed, we've just made $100,000 from thin air, putting in not 1 cent of our own money into a deal. We've just made $100,000 with no investment whatsoever. The bank will lend us 50% on the new valuation of $440, which is $220,000. I've got to cough up another $35,000 cash to pay out that private lender because he lent us 75%.
Mm-hmm. Yep.
So all I've got to come up with is $35,000 now, and we'll be paying 6.5% interest on a property. We've just gone up. We've just made $100,000 from thin air with $0 of our own money into it, and we're getting 12% gross rent. We're paying 6.5% interest going forward.
Wow.
99% of investors would not think creatively enough to do that deal. I didn't put 1 cent into that deal.
Yeah.
My wife didn't put in 1 cent either. She borrowed the $85,000. We've picked up over $100,000 with not 1 cent of our own money into the deal.
I've got a couple of things to say, but the first thing I want to say to our viewers or our listeners out there, I want to challenge you. If you think you've got a deal out there that you cannot finance, talk to Andrew. Mm. Give him a call. This is what all this is actually about. He'll be able to think creatively. I know there'll be a lot of you out there thinking, well, how the hell am I going to think up a scheme like that? How am I going? I don't have the knowledge, the experience, the creative thinking to be able to come up with ideas like that. Well, guess what? That's half the reason why Andrew wants to do this podcast, because he wants to talk to people. He wants to share his knowledge. There may even be a JV there. How would you like to be doing a JV with this guy who can think like this? So I challenge you, if you're out there with deals that you don't think can be done, give Andrew a call. Secondly, I want to push you on, let's call it rich mates who have money to lend privately. Mm. How did you find these people? Mm. Are they set up to, are they openly out there telling people, I've got money that I'll lend to people I trust, and put in all the right paperwork? Mm. We understand that it's not just a, here's the money, handshake, I want it back. It's all done under legal, proper paperwork. But a lot of people are thinking, well, A, maybe I don't have rich friends. Well, B, I do, but how would I ever go and ask them to borrow money? So I want you to explain how that's come about, and how someone out there who may have someone who's got money on how to approach them and how to bring that up.
Okay, well, there's going to be a mixture of private money lenders out there that you can use. Now, some of them are in the business of private lending. That's what they do. But most of the people there are not in the business of private money lending. This is what I'm interested in. The first, if we go to the next deal, when we go through it, I'll talk to you about 2 deals that I've done with a mate of mine who I knew had previously lent someone some money to purchase property. So I knew that he had done a private money loan before. That he was
open to that.
I knew I had a very strong relationship with him. He used to be a real estate agent. He understands property, which is probably a very good starting point for someone who might be willing to lend money. If they've got a good understanding of property, it's probably a pretty good start. And the people that have lent me money are real estate agents, mates of mine who understand property. Now, there's probably plenty of wealthy people that aren't in the real estate industry that would be happy to do private money lending. But for me, my network of friends, a lot of them are in real estate, and that's where I've sourced my loans from. Now, it's just very important that you learn how to sell private lending to these people so that they trust you on a deal. So first of all, obviously they're getting 4 or 5% in a term deposit. And if you can offer them 8, 9, 10% interest, they're going to double their returns. You need to overcome the fear factor of losing money. So if you can educate them that you will offer them a first mortgage security, just like a bank would have to protect themselves, the benefit there is and you tell them, if I miss one payment, you can go and sell the property on me and get your money back. That's what you can do when you've got a first mortgage payment.
Yep.
Now, it's not quite that simple. You might have to give a notice or two to say you're in arrears and hurry up within 14 days or I'll sell it on you. But
Yep.
if you've got the first mortgage, you're protected. Secondly, I'm going to sign a personal guarantee so that if whatever reason you don't recover your funds, I've got a personal guarantee. You can sue me for the difference. And by the way, I'll contribute up to $2,000 of your legal fees for your lawyer to prepare the personal guarantee and the loan agreement. So that's not going to cost you anything extra to get all this documented.
Yep.
If there's a dwelling on the site, I'll give you further security by taking out an insurance policy and list you as the interested party on the insurance policy. So if that building burns down, you'll be paid out and you're going to be covered from that perspective. So you've got all bases covered.
Yep. But that's great information to have. So you're giving them the security and explaining all that to them, so their risk is minimal to none, and that's what they're looking for, and they can make more than what it would be in a term deposit. But what I have worked out through you explaining how you've used these, that they're usually much more time sensitive deals, aren't they? They're shorter term, usually short term, based on what you're telling me.
Yes.
In order to bridge a gap to get to a more
that's exactly
standard
that's exactly
institutional
right.
loan.
That's exactly right, because as a borrower, I don't want to be paying higher interest rate than what I need to. I want to get a deal done. If I see a great deal, I want to buy it. I need to fund it. I'm happy to pay a little bit higher interest for a short time, usually 12 months, and then make sure that I get a bank loan at the end of that 12 months so I can revert back to the lower 6.5% interest rate.
I'm going to use a term that people probably do know, but this is effectively what you're doing with a private person. You're getting a bridging loan.
That's exactly right.
It's a bridging loan to in order to get a whole set of things, whatever that is, happening within a certain period of time. They make money on it. You get to a point where you can finance it through a
bank.
A bank, and you've just explained how you give them the security of doing that. So incredibly valuable advice to anyone out there who thinks they, where the bank says no.
Yeah, well, we did another podcast, Adam, if we go on to a couple of other examples where I bought an empty church a couple of years ago.
Yep.
Same thing, bank would not lend me the money, and I got a mate of mine to lend me 75% of the value of the church, and I later flicked it for a couple of $100,000. That same mate used the proceeds of that and lent me money on one of 90 Lawlers Road, Helidon, which is a 15,800 square metre industrial land site, which I could not get a bank loan on. The bank said, no, Andrew, there's no income from that property. There's no lease there. It's a development site, and I couldn't get a loan. But because I knew it was a great acquisition, I didn't use the lack of finance as an excuse not to proceed. I said, how can I finance this? So I went to that same mate who lent me on the church. I said, hey, will you lend me 70 or 75% on this industrial block of land? I'm going to get a development approval for a truck parking depot or industrial outdoor storage facility. Then I'm going to rent it out. I'm going to go to a bank, and they will then lend me at least 50% loan on that development once I've built it and got a A-grade tenant in there. Now, that 1 year has just expired, and unfortunately, my town planning team have not been able to get a development approval in time. So I have just extended that loan with my friend for another 12 months because he was in a position to do that. and the town planning process has been a lot more painful than I thought. And when I do get that approval, I'll build the truck parking depot, I'll rent it out, and I'll go to a bank. Now, if my friend had said, "Oh, Andrew, I want my money back,"
That's my next question.
like
Yep.
the other mate did with
Yep.
this one
Yep.
up in Townsville, then I would have had to go to another private lender and refinance it or come up with some cash to pay him out.
Okay, but you've got your confidence that you can do that. How do people get a network, or how do people source these private lenders? You know, there'll be people listening thinking, "I don't have any rich mates."
Well, it's an interesting philosophy. Like there is some one-liners in real estate development and investing along the lines of, if you find a great deal, the money will come.
Yep, love it.
It's sort of true, but it's actually a lot easier and a lot more comforting if you build relationships first. Go out, talk to people and say, "Look, this is what I do. Will you lend me money on this? If I find another deal in the future, will you lend me money on a 12-month loan if I find the right deal?" If you've got those relationships there, and I have a handful of very trusted relationships there that I can call on because I've built those relationships over time. So
Yep.
my advice is, don't rely on that statement. If you find the good enough deal, the money will come, because usually you've got a short 21-day finance clause or something along those lines to secure that finance.
Yep.
And you want to make sure that I've got people now, if I found a $10 million property tomorrow and I had no money, if the deal was good enough, I've got friends I can call now that would say, "Yes, Andrew, we'll work out a way to fund it,"
Yep.
because I've built the relationships.
Yep.
They've got to trust you, that you're good at what you do, you know what you're talking about, and they'll look at the deal itself. They're not going to look at my ability to repay.
No.
If the deal stacks up and it's strong enough,
Yep.
there'll be someone there to lend you the money, but it's best to build those relationships now.
Yep.
Don't just hope that someone will lend you the money.
At the time. Well, that brings me on to the next way of looking at things. That's obviously, private private finance, but what about vendor finance? A lot of people don't think about, what opportunity are you talking to? Are you talking to the person selling the asset?
Yeah.
Have you looked at what they're trying to achieve? If banks aren't lending to you to buy it, they're not lending to anyone else to buy it. And guess what? The seller still wants to sell, don't they?
Yeah.
Think about that for a minute. And you've utilized that many times.
Well, I've bought potentially 10 to 12 businesses using vendor finance, getting the seller to lend me the money, and I pay them off over 2 or 3 years. In real estate, it's less common, but it's definitely doable. I tried that approach with the property up at Harvey Bay 3 days ago, but the gentleman didn't want to go down that track. But I did do it just 3 months ago on another 10 acres of industrial land up at Longreach.
Yep.
The owners of that property were moving out of town, young couple, and they desperately needed $80,000 so that they could use that as a deposit to buy a house in the other city they were moving to. They were moving right now.
Sure.
They needed $80,000. So they had this industrial block of land that was empty. Banks won't lend on empty industrial land that's not leased. And I said to them, "Well, look, how about I'll give you your 80 grand. I'll fix your problem. You can go shopping for your house right now, which is the most important thing in your life for you and your young family.
Yep.
But you lend me the balance of the money, and I'll pay you back in 3 years' time. Once I've built this industrial truck parking depot and got a tenant, I'll go back to a bank and I'll give you the rest of the money in 3 years' time." Now, they came back and said, "Well, we'll do it if you can pay it back in 2 years." So I agreed on a 2-year vendor finance. And I said to them, "Well, look, you're only going to get 4% in a term deposit. I'll offer you 5% interest."
Mm-hmm.
And they agreed. 5% interest. It's cheaper than a bank loan for me.
Yep.
I've got 2 years now to get a development approval.
Yep.
And that uplift there, I'll either sell the site or I'll tenant it out and go and get a bank loan. And again, 99% of people would not have bought that property because they couldn't get a loan for it, unless you got the cash to buy 10
No,
acres of industrial land.
And again, we're looking here at a win-win, which is what I think you sell yourself short on, Andrew. Your ability to think
Yeah.
of these scenarios and how it actually works for everyone. And you've just you've just created a deal that's given them exactly what they needed. And you a far better deal than it would have been had you been able to go to a bank.
Well, the interesting thing is most people, when I talk like this, will probably think, well, why would a seller agree to lend you the money to buy this property that they're selling? Now, I can tell you now that a seller will never lend you the money unless it's in their interest as well. So you've got to find out what their needs are, and if you can help them, vendor finance is on the table. And I'll tell you what, going forward for the next few years, it's going to become more and more useful as a strategy because it's going to get harder and harder to get a bank loan in this increasing interest rate environment.
Absolutely.
No negative gearing. Private money lending and vendor finance is an increasing opportunity in coming years.
Yep. All right, let's pull this all together. I mean, these strategies are powerful. They're incredible, really, when you think about them. But what are the risks? What do people need to get right before attempting to get finance from anywhere else other than the standard institutional loans?
Well, the most important thing is you really, really need to be educated and back your own ability to locate a good deal. If there are two really, really important skill sets you need to have, one is you need to be able to find a great deal. And secondly, you need to learn how to creatively finance a great deal so that it doesn't slip through your fingers. Now, they're my greatest skill sets. I'm not very good at many things, honestly. I can hardly change a light bulb. I don't know anything about mechanics. I'm not very good at a lot of things, but I can sniff out a good deal, and I know how to think creatively about financing them.
Yeah. You're strategic in your thinking on, well, not only finding a good deal, but then how to make it happen.
Yes.
They are your two superpowers.
Yes, you need to be able to add value and get that property to a point within 12 months where you can refinance it.
And that is your superpower.
Yeah, there's no point paying 10, 11, 12% interest on a private money loan for a property that's generating 3, 4, 5, 6, 7, 8% rent because you're running at a loss. So private money lending, vendor finance is typically, in most cases, a short-term arrangement until you can get long-term funding.
Yep.
But if you just walk away, as I said, I bought 6 or 7 properties last year, none of them with a bank loan.
Yep.
And let me tell you, every one of them are deals of a lifetime.
Yep.
Every one of them. And most 99% of people would walk away because their broker said, we can't get you finance. And even my broker said, Andrew, you need to stop borrowing money. You can't get a loan anymore. Even my broker said that to me.
Yep.
But I don't listen to the broker.
No.
I go out and find a way.
But what's interesting to me, Andrew, is that they are deals of a lifetime because other people can't get them done.
Exactly.
That's what makes them the deal of a lifetime.
Exactly.
And that's what makes you so incredible in what you do. So a few takeaways here for anyone listening to this. Lender relationships, make sure you start talking to people.
Absolutely.
Build relationships with people who are in the same, which is what this podcast is actually all about. Jump on, put your email in, get the newsletter, talk to Andrew. He wants to meet people who want to do property deals, who are in property deals. He loves this stuff. As if you couldn't tell. Lender relationships, all right? There's one sitting right next to me, okay? There's the first bloke you should actually be creating one with. Okay. Legal structures, have a good accountant, have a good lawyer who can put together the documents that would allow private funding to take place. Exit strategies and buffers.
It's all there.
It's all there. All right. I'm going to give you a rapid fire finish off here to finish off this episode. Best negotiation lesson from this episode.
Don't give up when the bank says no.
Perfect. Most underrated strategy that's out there today?
Private money lending, it's more likely than vendor finance. I'd say private money lending.
What creates more wealth, buying well or structuring well?
That's a tough one, but I think buying well.
Okay. What deals excite you right now? What's the best asset class to go after?
Look, in all honesty, I'm going to turn that around. It's not the asset class I'm chasing. It's always going to be commercial property, but
Yep.
I love doing the deal that no one else can do. And the vendor finance one is a classic. People, oh, you can't do that, Andrew. I just did it.
Yep. You've done it before. And as you said, the key takeaway there is working out how it works for them.
Absolutely.
It's all tied in, and I've absolutely loved this episode because you've blown my mind. It's, well, guess what? If the banks aren't lending, they still want to sell. They're not going to lend to anyone else. You're actually, there is the deal. There is the opportunity right there. The minute you can't get finance on something,
that couple would be renting now. If
Yep.
I didn't go to them and say, hey, why don't you offer me vendor finance, they wouldn't have been able to buy their family home.
the minute a bank can't lend, there's the opportunity. There's where the deal of a lifetime can suddenly spring up, because you can work with the seller who wants to sell,
Absolutely.
or a private lender, and suddenly, bang, everyone can walk out, making a good quid.
Yep.
Fantastic.
Creative financing just gives you the opportunity to buy properties where there's problems that other people can't solve.
Yep.
It might be an empty commercial property. It might be a development site with no income. It might be just that you can't get a personal loan from a bank. Creative lending allows you to buy deals that other people can't buy.
Yep.
And help sellers sell a property that otherwise they can't sell.
Yep. Fantastic. Look, this has been one of the most practical episodes we've done. It's actually probably one of my favourites, to be absolutely honest, because we've done a number of other episodes where Andrew has explained that he's gotten private finance. He's used the term, oh, mate, lend me some money. Now, I think a lot of people might have thought, well, I don't have rich mates. Well, guess what? This is the one where we've broken all that down and explained exactly how it's done, and why it's such an amazing idea to do, to create opportunities and to create the deals of a lifetime. When the banks say no, it doesn't mean the opportunity is gone. In fact, it probably means the opportunity is better than ever. It just means you have to think differently and work on how to structure it. And guess what? Here's a man that can help you do it. If you've got value from this, because I know I certainly have, please do like the show, subscribe on YouTube, watch the other episodes, reach out to Andrew. I think it is hello@andrewwrightproperty.com.au is the email. You'll find his phone number there. He's open to talk to anyone. This isn't about selling courses. This isn't about, anything other than creating a community of like-minded investors who want to work together, help each other, advice, maybe even JV deals. Who knows? But Andrew, a cracking episode, unbelievable value you've given to people there. Thank you so much.
The other thing I forgot to say, Adam, before is I hate going to banks for a loan. There's so much nightmare with paperwork and torture and questions, and it's just so difficult and so stressful dealing with a bank. So a lot of these strategies, you also avoid that.
Yep.
A lot of these private lenders, they'll make a mind up within 2 days.
Yep. And
instead
just
of
get
2
the right
months.
paperwork in place, and away you go.
Yeah, it's so much easier.
Fantastic. Fantastic. Andrew, thanks very much.
Thanks, Adam. Thanks for listening to the Andrew Wright Property Podcast. This is all about building a community of like-minded investors who can share real-life stories, experiences, and collaborate with a view to helping each other. Join us. Get in touch through the link in the show notes. I look forward to you joining me on the next episode.